Breaking just this morning, CENTCOM confirming 2 U.S.-flagged merchant vessels have successfully transited the Strait of Hormuz as part of Project Freedom, a U.S. operation using 15,000 service members, guided missile destroyers, and more than 100 land and sea-based aircraft. The warning to Iran: any interference will be dealt with forcefully. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-hosts, Taylor Riggs, Brian Brenberg, Jackie DeAngelis, and with us for this hour, Making Money host Charles Payne. The latest decision putting the U.S.-Iranian ceasefire to the test. The regime warning that it will target U.S. forces that enter the strait. Roughly 1,600 vessels trapped on both sides of the strait right now. 20% of the world's energy supply frozen. Traffic is now at its lowest level since the start of Epic Fury.
Help is on the way as of today. The way to think about it is the market, because of the conflict around the strait, is in deficit about 10 million barrels a day. So every crude carrier that goes through has about 2 million barrels. So 4 or 5 crude carriers a day coming through of the pent-up demand. We think there are more than 150, 200 crude carriers that can come out. So I think the market's going to be very well supplied.
Oil, West Texas Intermediate, at least the futures are up nearly $4 a barrel on this news. Jackie.
This was not the reaction from the market or the oil market that I was expecting, Brian. I call it the Brian moment, for the moment that the United States would announce, as you were talking about last week, that you were waiting for this, that vessels would be able to go through, and that the strait would somewhat be open for business, and that we were controlling it. And the reason that I think the market and oil is having a problem with this is because the Iranians are saying this is a violation of the ceasefire, and the question is, will they retaliate, and then does this become a conflict once again? And even if that doesn't happen, we're still in this wait-and-see mode. No materialization of a deal has been made. You know, these plans keep going back and forth. The president keeps saying, we'll negotiate on the phone. We're not even going to go there. And so and the gas prices in the United States, they just continue to climb. And that's a huge problem as we're heading into summer driving season. You're close to almost $4.50 a gallon. Demand is only going to rise as it gets nicer out and people hit the roads with their family, and those prices are going to continue to rise. So I asked myself this question: if summer prices peak, for example, at $5 a gallon, how am I going to feel as a consumer about that? And I just say, there are certain things worth fighting for in life, and freedom in the Middle East and stabilizing that region and sort of recalibrating everything is worth fighting for. I paid $5 a gallon under Biden for climate initiatives and stimulus programs that I did not believe in at all. And so that went on even for a longer period of time. But that's why I think this market is still kind of teetering, because it's just not sure what's going to happen.
Charles, watching gas prices, and so oil prices today, and at least early this morning, the gasoline futures, the RBOB, were moving up a little bit, a few cents a gallon. But it's really the speed with which in the last week that the retail average gasoline price has gone up. It is up 34.6 cents a gallon in just the last week. And it is jarring. And of course, California, with the highest gas taxes in the nation and the most ridiculous emissions regulations, is north of $6 a gallon at $6.11. But there are 5 states that are north of $5 a gallon: Alaska, Washington, Oregon, Hawaii, and Nevada. And there are a lot of states in the Great Lakes region that will top $5 a gallon as well. And there was an article in the Journal, I think it was Friday, Americans spent $125 million more on gasoline on Friday than they did a week ago. So how does the economy cope with that?
Well, you can already see across the board, regionally, everyone's using less gasoline right now as an immediate way of coping. So far, whether it's retail sales or some of the other things that we've seen, we've been able to hang in there pretty good. We had a massive tailwind coming in with the one big beautiful bill and some of the things there, the wage growth thing. So it's interesting because even Friday, where the estimate is that we'll have a decent amount of new jobs created in the past month as well. So it's one of these dynamics where you keep asking yourself, how long, how long, how long? Certainly, I think a lot of people really are shocked so far at the resolve of the overall economy. And so to Jackie's point, just sort of, gutting it through, sticking it out kind of thing. But obviously, the longer they stay at these levels and the higher they go, the more deleterious it is for the economy, and particularly for individual households who are already, living week to paycheck. So, it's a tough one. It's a tough one. But by the same token, there are other things that are, each day that this goes by, we know that Iran gets closer to their own economic demise, that they've got inflation issues through the roof, beef prices up 80%, things like that. So it's a war of attrition as much as anything else right now. And for now, the American consumer has to bear some of the brunt of that. But, the other alternative would be maybe reading headlines of, maybe like more casualties and things like that. And I think most people think this would be a fair trade-off if we can resolve it sooner rather than later.
I have some data points on some of the economics, and I try to bring that. We'll talk about economics, and we'll circle back and talk about earnings and sort of the way that filters in through this market. This morning, factory orders, not a big market mover, but jumping more than expected in March, and February is revised higher. In April of 2026, we took the aggregate of some of the three critical PMIs, purchasing index, ISM, Eurozone, and China. So remember, above 50 is expansionary. So the sum of those have been above 150 for 4 consecutive months. That has only happened 5 times in the last 44 months. And it has risen the aggregate to the highest level since May of 2022. So that is telling me that the economic data is showing us that countries are expanding, purchasing, manufacturing, all of that so far is not in contractionary territory. So you ask, how does this go into earnings, and is this sort of to just the Mag 7, or is this broad based? And to me, I think I am reassured that earnings have been broad based. Let me tell you why. The small cap index, so the small companies within the S&P 500, have had earnings growth of 21%. So it's not just like Nvidia or Meta crushing the bottom line. It's the small companies as well. Earnings breadth has accelerated as well. So you're seeing improvement in semiconductors, which I know we'll talk about later, financials, industrials, consumer cyclicals. That, Brian, bodes well for an economy that is not just dependent on the big 7, which is what we want. Now, to talk about big tech, because a lot of people I think are wondering, is this CapEx cycle and big tech the only thing that's keeping us alive? Without that, would we be more subject to higher prices from the Iran war? Well, look, so within the top 30, we'll call it, 80% of those companies have reported, and it hasn't just been a beat, it's been a beat and a raise. So like forward guidance, I see good things. So again, don't want to be Pollyanna here, but the earnings, the numbers have been strong, the breadth has been widening. PMIs are still relatively in expansionary territory. So I think until I start to see some of that roll over, the economy for now, I think, can hang in there.
The only thing about all of the earnings, though, the earnings are backward looking. And that was why, and even the guidance, that this spike in gasoline prices in this country has been in 1 week is what we're talking about, and almost unprecedented. And so even in the data that we're getting from earnings, this is not showing up yet. And it's a choice. Will pardon my language, the political pissed offedness here in the United States force a change overseas? And that would mean, in essence, losing a war if you hand Iran what it wants. And that's the ability to continue to export its oil as much as it wants, when it wants, to whomever it wants, and to rebuild its nuclear program. Because this is jarring, and it will be jarring to earnings across the board. And I didn't even go into the rebuilding of the LNG facilities that have been damaged and other restarting wells in the Middle East.
You know, you brought a lot of good data there, Taylor. I thought you might see this data point, which I had not seen before.
Hit me with it.
It's not a new one. But the energy, I did not know this. The energy needed to generate $1 of gross domestic product, adjusted for inflation, since the year 2000.
Look at you.
This is more than I usually bring on this. Has fallen in the U.S. and Europe by about 33%.
Like we're more efficient and more productive?
Way more efficient. Okay, so I think part of the reason
So higher oil prices impact us less?
Yes, that's what I'm saying. So we're all kind of sitting here saying it hasn't hit us as badly as we thought. I think part of that is over the past 26 years, we have just gotten a heck of a lot more efficient on fossil. Now, you could argue there's some green energy in the mix there, and I'm not going to deny that, but the point is we've gotten more efficient. Okay, so that's why we haven't seen like as bad of a effect as we thought. Now, I was touched that you named a moment after me. I just want to say that, the Brian moment.
People have named things after you on Twitter, too. Remember?
Is that right?
There was the effect.
I don't want to know that. I don't want to know that if it's on Twitter.
Escapes me, but
oh my gosh, now, it's a lot of pressure now that it's my moment.
No, Brenberg effect. It was.
Brenberg effect. Okay, look. Here's what I would say. I'm in a way, I am sort of heartened by the fact that Iran is very mad about this blockade, and it's because I know that we've pinpointed their leverage. Like, this is what they have, and we have said we are focused on this. Now, we have gotten to the heart of the matter, okay? I have not been impressed by this ceasefire. I think it's going nowhere, and I've seen the reporting that the UAE saying Iran lobbed 4 missiles at them, and they intercepted 3 of them, which is telling me the ceasefire is falling apart, and that may be a good thing. Like, let's try to finish this in the Strait. Let's get the ships out. I'm also reading that we may have adjusted our rules of engagement in the Strait now so that we can go after these small boats and take them out. I think that would be a good thing. It's going to be bad in the short term for oil prices. It's going to be bad in the short term for bonds. It's going to be bad in the short term probably for the market. But I do think it gets us to the place we want to be sooner in terms of opening up the Strait. So I take some comfort in maybe that the Brian moment has started.
Yeah,
here.
one quick thing, though, on small businesses. I speak to a lot of different small businesses that have been saying that they have started to see the slowing in their business. And one person said, I have a lot of international clients, and so I feel like travel is down because jet fuel prices are up. Somebody else is in the food business and was just saying that, you know, discretionary income, people might be pulling back because their customers are just not buying as much. And so to your point, Dagan, about the earnings being backward looking, and even if some of these companies can weather the storm, the small businesses might have a tougher time doing it.
Right. Not tech, but